Well, the global economy has had its worst start to the year in decades. Does that mean we are heading for another global recession like in 2008? Or is the worst over now and it's time for a global bounce back? And will we in India be affected? Are we heading for a crisis or a slowdown in India? Or are lower oil prices and commodity prices going to help us stay away from a global downturn? With India's property prices down and with the stock market now at its lowest level in nearly a year and a half, should you go out and buy stocks and buy property hoping that things have hit a rock bottom and there's going to be a U-turn? Or is it going to get worse? And should you stay away from the markets altogether? In this series of top trends for the year ahead, last January we looked at what's going to happen in 2015 when Ruchir Sharma gave us his forecast for what lies ahead. And if you look at the web, at Twitter, Facebook and other blogs by economists, the assessment is almost universal that Ruchir's forecasts were amazingly prescient. For example, that the global economy will be sluggish and get worse over 2015, or about low oil prices, and on how Make in India will find it tough going in the face of global headwinds, and many more important trends that Ruchir mentioned. But Ruchir, for me, has had an amazing recognition globally for his analysis on China. And he said on this show last year, many of the issues in China that have been and are even now beginning to unfold. For example, he spoke here and in his writings extensively about the major problems with the Chinese economy and the growing national debt in China, a crucially important set of warnings, especially now that China is such a major player in the world economy. Now, Ruchir, you actually started writing about China more than 2 years ago, that there are warning signals, and nobody believed you then. I certainly didn't believe you. Still don't actually, but...
No, I just feel that, as far as China is concerned, I think we've all grown up being really fascinated by what China has achieved. And so was I for much of the last 30 years, that this is the single biggest economic miracle that we have seen in recent history. But something began to go wrong after the financial crisis of 2008 and 2009. And that is something that we will discuss today.
That was the turning point.
That's right. That they ended up taking on far too much debt to sustain unrealistic growth targets. And I think that's the price that they're paying today with all the problems that they're facing.
Right. So what we plan to do today is, with Ruchir, go through what are the top trends for 2016. Let's start with the first one, Ruchir, about is there going to be a global recession? Is there not going to be? Are we going to come back out of it? And here's some of Ruchir's data. If you look at it, there's been a global recession every 8 years. And, and the last recession was 7 years ago, Ruchir, 2008. What are you trying to... I mean, that's not very subtle, right? You're telling, but here it is. Look at that. Every 8 years, there's a global recession, roughly, on average. And it's going sharply down towards a recession globally is about 2%, and it's heading towards that right now. Difficult to say whether it's going to be 2008, it's going to be a recession. What's the general trend right now?
Well, I think that the entire problem is this, that the global economy is weak, and I think it's still weakening. Last year was the worst year for the global economy since the financial crisis ended in 2008, 2009. Right. And the problem here is this, that if you look at long-term economic history, recessions follow expansions just like nights follow day. So it's like, in terms of when you have a long expansion, some problem emerges in some part of the world, and that typically pulls the global economy down. And so that's what I'm really concerned about, which is that that this economic expansion is quite mature. This is an aging cycle, and so we need to be on the lookout for where are the risks, what can trip the global economy. As you said, there is no science to this, that this is an average number, once every 8 years.
You're the only one who admits there's no science. All us economists say we are pure scientific, it's purely on data points and we do science, but you're right, there's a lot of judgment, assessment, gut feel, and analysis, actually.
And this number of average, right? So this is once every 8 years as an average. We've had some longer cycles.
7 years, 10 years, yeah.
Right, we've had some longer cycles. But having said that, given what's happening in China, and given just how important China has become to the global economy, I think that's something we need to really focus on intensely.
That's the big change. From your data, what you've told me is that there's a major change in what could cause a global recession. So far, if you look at the data, all global recessions have historically been US-led global recessions in the past. China now is the biggest risk. And why? This is what Ruchir points out. Look at the 20 years from 1990 to 2009, the contribution to global economic growth by America was 30%, and China only 12%. So we'd say when America sneezes, the world catches a cold, right? Now look at what happened. This is Ruchir's data. 2010 to 2015, the US is now only 17% of global growth. That's their contribution. But China is 34%, twice as important as the United States in its contribution to global growth. So when China sneezes, we're in trouble now.
Yes, I think that's the big change, which is that the Chinese economy has become very large, and that cuts both ways. So it's been a big contributor to global growth. But now, because a lot of its growth in the last few years was facilitated by record levels of debt, that has become a source of vulnerability for the global economy now. So the issue the world faces today is that the Chinese economy is extremely vulnerable after this debt binge that it was on the last decade. And its size is so big that now China is more than 10% of global economic output, and that's a real problem.
Actually, that was the remarkably important thing about your writings and what you said here last year about the importance, how significant China is, that China is not only in trouble, but it's such a major player. And just as you were saying, what's wrong with China today? This is what Ruchir has been writing about, and in a nutshell, this is the key problem. China is most indebted among developing nations. That's a key difference. Now look at that. Debt as a percentage of GDP. China, 280%. India, 120. Brazil, even 160. And Indonesia, very low and very comfortable. Of course, the higher the per capita income, you can afford more percentage debt as a percentage of GDP, and China is higher GDP per capita income than us. But still, 280% is wild, but that's not the only issue you pointed out. You found that there is a critical point. It's been on a debt binge. It's the sharpest rise in debt, not just the level actually, that you can take levels, but if you hit that 40% mark, where your debt is 40% of GDP, if it grows by more than 40% in GDP in 5 years, that's a dangerous thing. And look at what Ruchir's data shows about China. In the last 5 years, it's grown by 72%. Debt, the increase in debt by 72%. How does that 40% come about?
Right. You know, that's something that we carried a lot of research for post the global financial crisis of 2008 and 2009. And here are two things that we found. One, the single most important predictor of both financial crises and sharp economic slowdowns is when a country takes on too much debt over a short span of time. And what we found here was that that span of time is about 5 years or so. That if a country takes on too much debt...
In 5 years?
Yes, over a 5-year time horizon, then for the next 5 years, the country pays a major bill for that.
Wow.
And I think that...
and
why
how
does it
many
happen?
countries did you study for this?
Right, so we, two things here. That we studied here tons of countries, and what we found was that there were about 30 countries where debt as a share of the economy increased by 40 percentage points or more over a 5-year time horizon.
Right.
And these 30 countries, they all saw two things happen to them in the next 5 years. One, that there was a very sharp slowdown in economic growth.
Right.
And typically economic growth more than halved in these countries.
Right.
And the second thing is that many of these countries faced a financial crisis. In fact, about 70% of these countries faced a financial crisis.
All of them who had a 40% increase in their debt or immediately faced a crisis in the next 5 years?
Yeah, and not all of them. They all faced a major economic slowdown,
Right.
and 70% faced a financial crisis in the next...
Slowdown, and some got even worse.
And why does this happen? It happens because when you lend out too much over a short span of time...
Trying to grow, trying to push your GDP.
Yes. You end up making bad loans because the system can't absorb it. You don't know who the borrowers are, what their credit history is, and that's what China did. That until 2008, 2009, China's debt profile was quite stable, and so therefore all of us were quite optimistic on China.